All right, today we're going to break down a concept that has totally changed the game for a whole new generation of investors, fractional shares. Let's dive right in.
So have you ever been scrolling, you see a company like Apple or Netflix, and you think, man, I'd love to own a piece of that. But then you see the stock price and realize a single share costs hundreds of dollars. It's a super common problem, right? But guess what? There's a really elegant solution. Okay, so to really get our heads around this, let's start with a super simple analogy. Let's forget all the complicated Wall Street jargon for a second, and just think about a company as one giant pizza. I know it sounds a little weird, but at its heart, a company is basically just a machine that's built to do one thing: crank out cash, right? It sells stuff, it pays its bills, and whatever is left over, that's the profit. We call it earnings.
So, when you own a piece of that money-making machine, you've got something called equity. Don't let the fancy word fool you. It's just ownership, plain and simple. And that ownership gives you a right to a piece of the earnings that company is making.
Okay, so if the whole company is one big pizza, how do you split up the ownership between a bunch of different people? Well, it's pretty simple, actually. You just slice it up.
And every single one of those slices, that's what we call a share. A share of stock is literally just one unit of ownership in that company. So, the more slices you have, the bigger your piece of the pizza. It's that straightforward.
Okay, let's use some real numbers to make this super clear. Let's say our company, our pizza, just made 10 grand in earnings this year. That's the total pot of money that all the owners get to claim a piece of.
Now this is where it gets really interesting. Look at how this works. If the company is cut into only 10 slices, or shares, then each one of those shares is worth $1,000 of the earnings. But if you cut that same pizza into 1,000 slices, now each slice is only worth $10. See? The total amount of money hasn't changed at all. It's just divided up differently.
And this quote just nails it, right? You're not creating more value out of thin air by making more shares. You're not making the pizza any bigger. You're just cutting it into smaller and smaller pieces.
Okay, so that's the theory. A share is a slice of the company pizza. But how does this actually work in the real world? The big question is, how much does one of these slices cost? And this, right here, is where we hit that wall we were talking about at the beginning. Because the price for a single slice can be, well, pretty steep. It can make it tough for a lot of us to even get in the game.
Just take a look at this. At the time this source material was put together, a single share of Netflix, just one slice of that pizza, was going to set you back $246. I mean, for a lot of people, that's a big chunk of change to drop all at once.
But listen, this is so important. The price tag by itself doesn't really tell you the whole story. A $246 price means almost nothing unless you know what you're actually getting for that money.
And that's where this little thing called earnings per share, or EPS, comes in. It's just a simple way of figuring out exactly how much profit is tied to each individual share. It's the key to connecting that price to the actual value.
Let's break it down with this lemonade stand. Super simple. It makes 30 bucks on a Saturday, right? And the whole thing is split into 100 shares. You just do the math. $30 divided by 100 shares. Boom. Each share earned 30 cents. That's its EPS. Now you actually know the value you're buying into.
So, okay, we've got this problem, right? Some of these pizza slices are super valuable, but they also cost a ton of money. And this is where the whole point of today's explainer comes into play. It's the perfect ending to our pizza story.
Yeah, I mean, the whole stock market was traditionally built on selling whole slices of pizza. But what if you didn't have to buy the whole thing? What if you only have, say, 10 bucks, but you still want a piece of that awesome, expensive company?
And this is the game changer, right here. Instead of needing that $246 for one Netflix share, fractional investing lets you say, hey, I want to buy $10 worth of Netflix. You're not getting a whole slice? No, but you're getting a bite of the slice. You're in the game.
And that, my friends, is a fractional share. It's just a piece of a single share. And this totally flips the whole model upside down. Now, you're not investing based on what a share costs, you're investing based on the amount of money you want to put in.
So why does this matter so much to you? Well, for one, it means those giant, expensive companies like Apple or Netflix, they're not out of reach anymore. You can literally start investing with just a few dollars. It also makes it so much easier to spread your money around, build a diversified portfolio. And the best part, you still get your claim to the company's earnings, just in proportion to the size of your bite.
This just blows the doors open to a whole new world of possibilities. Seriously,
The question isn't, can I afford this anymore? Now the question is, which company's future do I really believe in? So now that you can own pretty much any piece of any pie you want, what future are you going to invest in?